And this is La La Land, ETH last year versus this year. So, oh, and by the way, that's the straightforward Bitcoin pattern. I mean, everything I look at, every single thing shouts the banana zone. Now, I'm wearing my banana zone t-shirt because I think it's coming. I think it's coming in days or maybe a week. And before I said, well, maybe it's next month, maybe it's the month after, maybe it's this week, I don't know. I'm like, no, no, no.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. Following an extended period characterized by significant declines and considerable fluctuations, the cryptocurrency market is now exhibiting indications of a substantial rebound. The current sentiment is driven by a confluence of positive macroeconomic indicators and key regulatory achievements, which a number of analysts suggest may signify a pivotal moment for the industry. The market experienced an initial uplift after the Federal Reserve's announcement on Wednesday, which signaled a reduction in interest rates. This action is generally perceived as a measure to alleviate financial conditions and enhance liquidity within the overall economy, which has traditionally had a positive impact on risk assets, such as cryptocurrencies. On Friday, a significant development occurred as the U.S. Securities and Exchange Commission, SEC, granted approval for the listing and trading of Bitcoin options. Eric Balchunas, a senior ETF analyst at Bloomberg, utilized social media to verify the information, indicating that the SEC had expedited the approval process for BlackRock's iShares Bitcoin Trust, IBIT options. Balchunas highlighted that additional issuers of spot Bitcoin ETFs are expected to gain approval soon, potentially leading to increased institutional involvement in the market. This development represents a significant milestone for Bitcoin, as the introduction of options trading is likely to improve liquidity, draw in institutional investors, and indicate a more advanced market structure. Michael Saylor, executive chairman of MicroStrategy and a prominent proponent of Bitcoin, was among the initial responders to the SEC's approval. Saylor emphasized the importance of this development, indicating that it has the potential to significantly enhance institutional adoption of Bitcoin. The SEC's decision represents a significant milestone in the recognition of Bitcoin as a viable asset class for large financial institutions. This development is particularly noteworthy, as options trading provides investors with advanced mechanisms for hedging and risk management. In a subsequent communication, Saylor disclosed further developments that may bolster Bitcoin's attractiveness to institutional investors. The report from Unchained Crypto indicates that BNY Mellon is on track to be the first significant bank to obtain an exemption from SEC Accounting Bulletin 121, SAB 121. This exemption would enable banks to offer Bitcoin custody services to their clients, thereby eliminating a significant regulatory obstacle that has hindered traditional financial institutions from fully engaging in the digital asset market. Saylor posits that the capacity of banks to custody Bitcoin would signify a significant advancement, allowing affluent clients and institutional investors to securely manage Bitcoin within their current banking frameworks. The current regulatory developments are occurring amid growing speculation regarding the potential for central banks to initiate significant monetary easing measures in the near future. With rising apprehensions regarding global economic growth, numerous experts, including Real Vision's CEO Raoul Pal, anticipate that central banks will engage in substantial monetary expansion initiatives. Raoul, a well-regarded expert in macroeconomic analysis, has consistently maintained that trends in global liquidity significantly influence cryptocurrency valuations. A recent video on his YouTube channel features Raoul analyzing several charts that indicate a potential increase in global liquidity over the next 10 weeks. He posits that this could lead to a significant rally in Bitcoin and other digital assets. Raoul describes the forthcoming phase as the banana zone, indicating a time frame where cryptocurrencies may experience significant price volatility due to an influx of liquidity into the market. The convergence of advantageous regulatory developments, increased institutional participation, and the potential for central banks to introduce new liquidity into the market suggests that a significant upward movement in Bitcoin's price may be on the horizon, as posited by Raoul Pal and other analysts. The alignment of these elements, the SEI's endorsement of Bitcoin options, prospective banking custody solutions, and the impending monetary expansion, has led numerous market participants to believe that the cryptocurrency market is nearing the onset of a new bull run. If these trends persist, it is plausible that Bitcoin and other digital assets will not only rebound from recent lows, but may also achieve new all-time highs in the upcoming months, and lots of things Raoul Pal discusses, so please watch the video to end, and share this video and subscribe our channel Everyday Finance. Thanks.
Just to show why it matters, this is the Banana Zone. I posted this on Twitter. Global M2, 10-week lead over Bitcoin. Do you need anything better than that? Oh, wait, I can give you something better than that. I can give you the GMI total liquidity, which is both private sector and state sector liquidity versus Bitcoin. It says the Banana Zone is here. That's the only thing I can think of, is that everything I look at says the Banana Zone is here. Bitcoin seasonality, election years, October, up only. Right? And these are big moves. Same in the Russell 2000. I'm not going to go through all of Julian's charts because that's unfair, and we're going to do it to the Real Vision RVIP group tomorrow. We've got an AMA there where we're going to really dig in to some of our stuff. Here's Bitcoin last year versus this year. I mean, really? And this is La La Land, ETH last year versus this year. So, and by the way, that's the straightforward Bitcoin pattern. I mean, everything I look at, every single thing shouts the Banana Zone. Now, I'm wearing my Banana Zone t-shirt because I think it's coming. I think it's coming in days or maybe a week. And before I said, well, maybe it's next month, maybe it's the month after, maybe it's this week, I don't know. I'm like, no. Julian and I in Global Macro Investor, which is the flagship research service. And if you haven't checked it out, go to globalmacroinvestor.com, have a look, see what we do from there. That's where we do the deep work. I think we do more macro crypto work than anybody else in the world, and I think our macro work is the best in the world as well. And we've done thousands of hours on this. And I know it sounds hubristic, but I honestly give this Banana Zone an 80-something% chance of happening almost immediately. Give it 2 weeks, within 2 weeks. And I know that sticking my neck out and wearing my Banana Zone t-shirt, I'm trying not to jinx the thing. But, as I've talked about, all of our hopes and dreams are in this. Mine too. Real Vision as a business. Almost everybody I speak to, I've been on the phone with a few, billionaire GMI subscribers, friends of mine. Everybody wants this to happen. Everyone needs this to happen because people are invested.
Bitcoin has shown a notable recovery, increasing by more than 22% from its recent low of $52,540 to reach around $64,812 as of September 20th. As of the current date, Bitcoin has experienced a minor retracement, with its trading price at $62,761. In light of the recent rally, several technical and on-chain indicators are signaling potential concerns regarding the sustainability of Bitcoin's current price movements. Let us examine the elements that may contribute to a decline in price in the short term. Current market dynamics and blockchain indicators. The recent surge of Bitcoin past $62,000 has positioned its price above the realized price for short-term holders, indicating that this segment of traders has successfully converted a portion of their unrealized losses into realized gains. Data from the market analytics firm Into the Cryptoverse indicates that just 14.2% of Bitcoin investors were experiencing losses when Bitcoin was priced at approximately $62,500 on September 20th. This suggests that more than 85% of the circulating Bitcoin supply was generating profits at this price point. This metric, referred to as percentage supply and profit, assesses the ratio of unspent transaction outputs, UTXOs, that are currently profitable by analyzing the price at which Bitcoin was last transacted against its present value. A significant proportion of holders currently realizing profits may indicate a potentially overheated market condition. Historically, markets characterized by a significant number of profitable positions tend to experience corrections, as traders may begin to secure their gains, potentially leading to heightened selling pressure. Should Bitcoin maintain its current trading range or experience upward movement, a greater number of holders will find themselves in a profitable position, thereby heightening the probability of profit-taking and subsequent price corrections. Risk of profit-taking. One of the main considerations after Bitcoin's recent increase is the potential for substantial profit-taking. The increase from $52,540 to $64,812 has resulted in a resurgence of profitability for numerous traders, particularly those with short-term positions who experienced losses during the market decline. Historically, there are notable spikes in profit-taking during these periods, especially when there is apprehension among traders regarding a potential market reversal or a cooling off of momentum. An influx of selling activity from investors could lead to heightened selling pressure, potentially resulting in a decline in price in the near term. Significant increase in futures open interest. A notable technical indicator warranting caution is the significant increase in Bitcoin futures open interest, which has been trending upward since early September. On August 31st, futures open interest experienced a decline, but by September 8th, it rebounded significantly, increasing by 22.7% to achieve a 4-week peak of $34.72 billion. The rise in open interest indicates that a considerable volume of new positions has been established in the derivatives market. Rising open interest typically suggests an increasing level of confidence in the asset. However, it may also signify a crowded market, especially if a significant share of these positions is driven by speculation. An uptick in futures open interest, alongside overbought conditions in the spot market, may set the stage for heightened volatility. Should Bitcoin's price exhibit signs of weakness, traders with leveraged positions might be compelled to liquidate, which could lead to a swift downturn in price. These circumstances frequently result in a chain reaction of liquidations within the futures market, potentially intensifying both the pace and magnitude of any downturns. The significant increase in futures open interest may result in heightened volatility should leveraged positions start to be liquidated. Bitcoin's recent recovery has shown notable strength. However, various technical and on-chain indicators suggest there may be potential downside risks looming in the short term. The significant percentage of profitable holders indicates potential market overheating, while the rise in futures open interest may point to forthcoming volatility. It is advisable for investors to exercise caution and monitor critical support levels attentively, as a breach of these levels may initiate a more substantial correction. In the long term, Bitcoin's strong fundamentals continue to hold steady, and any market pullbacks may offer strategic entry points for long-term investors. Let's back to the Raoul Pal interview.
Now, technology, there's a bunch of other ways of skinning this cat, but really, people have been like this with high interest rates, a slow business cycle where ISM has been bumping along. And I know people like a lot of, people on Twitter are like, oh, well, my God, the markets are all-time high. What's everybody complaining about? Speak to real fucking people when their mortgages are like that, their interest payments are like that, their credit card bills are like that. Speak to corporations who are trying to borrow money that aren't kind of AAA rated tech companies that have no debt. All of this stuff. it has been very, very difficult for a while. Rates have been the highest they have for a very long time. The rate of change of interest rates was enormous. Inflation is now wildly below interest rates. So real rates are ridiculously restrictive, and people feel it. People are not happy. People don't have personal expenditure abilities to do what they want, but it's coming. It's coming. The business cycle's changing. So all of you who run businesses, all of you who see the sluggishness of the cycle and wonder why the equity market's going to all-time highs and your business isn't yet, it's all going to come. Things are going to improve dramatically. The equity market's driven by liquidity. Your earnings, yours and mine, are driven by the business cycle. And that is just about to pick up. So cheers. Here's to a much, much better 18 months ahead, both for your portfolio, for your personal lives, and everything else. So, you're going to have a go at me again for eating with my mouth open. But if I don't, I can't talk to you. And then you're sitting there thinking, why the fuck am I watching this when Raoul's just chewing his food? I'm going to be uncouth. I could do this as well, but that's ridiculous.
From a technical perspective, Bitcoin is facing considerable resistance at the $64,000 mark. This price level has demonstrated significant resistance, as past efforts to surpass it have encountered substantial selling pressure. On August 25th, Bitcoin encountered resistance at this level, leading to a significant 17.5% drop to $52,540, underscoring the resolve of bearish market participants to protect this range. For Bitcoin to sustain its recovery trajectory, it is essential to secure a definitive daily candlestick close above the $64,000 threshold. This indicates a change in market sentiment and may pave the way for additional upward momentum. Should the bulls be unable to convert the $64,000, $66,000 range into a support level, Bitcoin could experience a downward adjustment. In this situation, the liquidation of long positions may intensify the selling pressure, possibly pushing the price down to the $62,000 mark. Data from CoinGlass highlights the significance of the $64,000 resistance level, as a considerable accumulation of ask orders is forming just above this price point. The existence of these substantial sell orders underscores the importance of this resistance, indicating considerable supply at this price point, thereby creating a significant obstacle for bullish movements to surpass. The $64,000 resistance zone represents a critical inflection point for Bitcoin's price trajectory. A successful breakout above this level may indicate a resurgence in bullish momentum, whereas a failure to surpass this threshold could lead to a more significant correction, potentially bringing the price back to support levels near $62,000. It is essential for traders to observe Bitcoin's price movements at this pivotal resistance level, as it is expected to influence the market's short-term trajectory. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.